Welcome back to the ETF Inspector. It's Saturday, October 25th, but this video will be premiering in the morning as usual on Sunday, and that will be October 26th. This is our week look ahead and payment distribution guesstimate video for ULTY, YieldMax's Ultra Option Income Strategy Fund, and SLTY, their Ultra Short Option Income Strategy Fund. Reminder to follow me on X at ETF_Inspector1 for all things related to the videos and the ETFs that I cover. Nothing else on there. I always bring this up and then forget to talk about it, so I'll just mention it here. I use Market Chameleon when I like to update my implied volatilities. Now, they are 30-day IVs, and the fund managers have told us that they use the 7-day or like the instantaneous IV, but that's much harder to look up. It's possible, but it's much harder to look up, and I'd have to be on top of it at every trade. So this is just to help us get a ballpark figure for our numbers. All right, first we're going to take a look at ULTY for the trades. They had trades every day of the week, and it totaled to be about 290 trades. So we've processed all those trades on a daily basis, and they had brought in or had a credit trading surplus, however you want to look at it. This is all options trading specifically. $8.2 million on Monday, $5.2 million on Tuesday, $14.3 million on Wednesday, $77.9 million on Thursday, and $2.2 million on Friday, for a grand total of $107,919,999 on the trading week. So the first step in coming up with our guesstimate is if they make enough throughout the trading, then that's what they're paying. We don't even have to worry too much about other things. So our income estimate would just be taking that total and dividing it out by, let me save the drama for a minute, dividing it out by the number of shares. But that's obviously a large number, and we did notice that, so not on Monday or Tuesday, but on Wednesday we also sold some shares of some different things. So that trading is going to play into it. And so I had to scroll back. So as you can see, we've got 8,600 lines of information here for ULTY. So I had to unhide. I hide them so we don't have to scroll through them all the time. I had to unhide the above lines, go through and find our purchase prices on Figma and Pony AI to see if those are credits or debits, gains or losses. Actually, yeah, it's realized at this point because we've sold all the shares. And when I went back and looked through, they were both losses. We bought Figma for a higher price, and we bought Pony AI for a higher price. So we sold these for losses. So if we're going to look at the income in the week, we brought in 107, almost 108 million, but we also closed out some trades that locked in some losses. Pony, we lost 16.6 million on trading of those shares. And Figma, we lost 22.8 million. So those two numbers are going to have to come out of that 107 million. As you can see, it's right here. We then divide that answer by the total number of shares, and it comes out to 12.74 cents. So they made enough money to pay 12.74 cents this week, and it would be 100% income, 0% return of capital. Now, do we think that they're going to pay 12.74 cents? I mean, it's definitely possible. They absolutely made it, but let's just look at some other numbers just in case. So the next step, they tell us to look at the implied volatility. So that's going to take us on a little journey to the other page before we can get back. Again, I know they're not using the 30-day IV, so this is just getting us in the ballpark. Also, they're taking into account the IV of every options trade. I have just looked up the IV of the underlyings because it would, again, take, we would have to multiply the amount of time it takes to look this up. So we're getting into the ballpark. I created my own weighting system. This is not the weight of a firm in the fund. It's the weight of a firm versus all the other underlyings. So doesn't include the cash, doesn't include all the options, doesn't include the government obligation funds. It's just the underlyings. I then multiply that weight by the IV. So I have a weighted average on our IV to multiply to get our guesstimate. Underneath each one, we have a plus or minus sign showing whether the IV, implied volatility, increased or decreased over the course of the week or from last week's video. And so we'll just roll through here real quick. So 2.3% of the money is in a firm, 84.5% IV is a drop. Bitmine immersion dropped as well, but it's still up over 100, 105.3 for 4.1% of the money. Cipher mining, smaller selection here, 2.1%, dropped, but if it can drop and still be at 156%, that's pretty nice. Now, Centene Corp is one of 3 put spreads within the fund. So since we don't have underlying shares to go with it, we just trade a put spread on it, then I don't have a way to weight this into my calculation. So I do just like to look it up just so we can keep track of, what kind of IV. So if we're teetering high or low, we can take a look at these 3 and add or subtract to our overall calculation. So Centene went up to 65.4%. Coinbase dropped with 6.7% of the money to 65.9% IV. CoreWeave, we finally got an increase, 99.7 with 6.1% of the money. Galaxy, here's another one of those put spreads where we don't own any shares. Don't let this gray fool you. That's First American Government Obligation Funds. They dropped, but they're still real nice and high, 92.9% for Galaxy. Hims and Hers has 5.6% of the money. It's a decrease on the IV, but it's still high, 97.7. Robinhood dropped as well, 70.9% with 7% of the money. Iron has just under 4% of the money, and their implied volatility dropped, but it's still real high, 132.7. Lucid Group increased 87.4% with 3.5% of the money. And now Lululemon, this is the next one here. This is the third and final put spread with no underlying shares to go with it. Kind of surprised that we trade options on this one, seeing as how it's such low IV to be sitting in a high IV fund, but it dropped this week to 39.4%. MP Materials Corp has 3.5% of the money and dropped to 88.9%. I should note that basically anything 85% and above is going to really help us work well with our calculations, because 85% is generally the somewhat range that ULTY tries to pay. Strategy is 3.6% of the money. It's a decrease to 60.4% IV. Palantir in the 60s as well, 63.4, another decrease, 7.8% of the money. Quantum, just under 3.8% of the money. It's a drop, but still well over 100 at 116.4. Another one high, Rigetti, dropped, but still high, 132.9% with almost 6% of the money. Rocket Lab, 8.19%. Let's see real quick if they are our largest holding within the fund. I think they are. Nothing higher. Yes, so Rocket Lab's our largest holding, and they have a nearly 100% implied volatility, so that's going to help the calculation a lot, but it did decrease over the last week. Rocket Companies, 6% of the money, decreased to 67.5%. NewScale, another almost 6.5%, dropped but still high, 118.6%. SoundHound, another one, drops but still high, 116.9%, 4.9% of the money. Symbotic increased to 113.8% IV. That's 3.7% of the money. And Upstart, 3.9% of the money, increased to 108.6. Now, if you're saying, what are you talking about? What's IV? Implied volatility is just the this isn't the technical definition, so you should just look up options and implied volatility to get the thing. But it's kind of the possible likely moves that the funds could do. So that these are all very high implied volatility. They could swing very large amounts. If you look up a lot of these funds, some of them have 100, 200, and 300% moves over the course of the year. So That's what we're doing here. So all in all, only 4 went up this week. 16 went down. And that was expected. About 2 weeks ago, everything kind of skyrocketed. So we kind of expected them not to stay that high. For the put spreads, 1 went up and 2 came down. On average, there's 5. The average holding or weighting is 5%. So you can kind of take that with how we talked about how much was in each. So we take all those, we write this big formula here that works all of them into play, and it comes out to a 96.19% implied volatility weighted average. Last week it was over 100, so this is a decrease, but again, anything over 85, we like it. So now we're going to come back here, and we're going to use those numbers to make our implied volatility estimate. It's a calculation that's going to use that implied volatility weighted average and the share price. And that comes out to 9.32 cents. That's getting a little more realistic to what we think. So now I just kind of make my guesstimate from there. And I may be low, but I'm saying 9.25 cents. That would be a 95% annual yield. I believe it would be the highest percentage payout that ULTY has paid as long as I've been covering them, since I don't know if it was May, I think. So now it's absolutely possible that they just pay out what they made. I think the way the share price has been struggling lately, that they're not going to want to knock 12 plus cents off of it. As you can see, it's just, no matter which chart you go to, it's just not too pretty. So I don't think they're going to want to take that much out of the share price, but I could be wrong. And a lot of times they say a large percentage of it's math, and a small, 80% of the decision is the straight up math, and that comes to that number right there. Well, there's 2 different maths, that number and that number. Maybe I should have picked the number in between those. We could see a 10 plus cent week this week. I mean, don't get me wrong, we could see a 12.74 cent. It's absolutely, it's dead on the numbers. But are we going to take into account that the share price, and they do say the share price plays into it. So, all right, so let's go back, look at it again. Over the course of the week, we went from 520 to 504. That's a 16-cent drop. So, yeah, I'm going to back up again and say I don't think it's going to be the maximum amount. I think we're going to be over 9 cents, keeping people happy. And that's going to be it. That's my guess. 9.25 cents. All right. I think I took way too long to come to that conclusion. All right. Next, we're going to take a look at the week ahead. So everything is updated. These are all the options that after everything closed out and rolled on Friday, everything's updated. And so we're looking at Affirm Holdings selling calls at 80 and 81. They're 6 and 7% out of the money. They're also selling puts at 63 and 65 to help pay for their protective puts. Now, I won't sit there and go through all the numbers on the protective puts, but you can see them if you're watching, right? And they are not highlighted. I highlight the things that we are selling because that generated income, and we're going to have to close them out. We'd like to pay a smaller amount of money. So, and also the percentage out of the money that they are tells us how much the share price of the underlying can go up and we're able to capture it instead of all of a sudden having to increase our expenses to close out these calls. Bitmine Immersion, $50.41 closing price. They've sold calls at 53, 5% out of the money. They've sold puts at 40, 20% out of the money to help pay for the $45 puts. Maybe I will mention the puts. We'll go back and forth. I can't make up my mind. Cash and other, $8.5 million. Total that up with the First American Government Obligation Funds of $391 million. It's just over $400 million. I label it dry powder. It's not all dry powder because a lot of money is set aside for the put spreads. Cipher Mining. This one had a big Friday. So they had already rolled, unfortunately, so their calls are sold at 18 and 18.50. They're already in the money by 10 and 12%. CNC Corp. You don't see gray because they don't own any shares. They did a put spread selling the 34s. They are 0.2% out of the money. Coinbase selling the 362.50 and the 375 calls, 2.2 and 5.7% out of the money. They've also sold $280 puts, 21% out of the money, to help pay for the protective puts at 310 and 315. CoreWeave, here's just like Cypher. They went up after getting rolled, and so they've sold calls at 129 and 130. They're just about 2 and 2.6% out. Sold puts at 100, 24% out to pay for the 110 and 112 puts. We already talked about the government funds. Next, we have the Galaxy Digital put spread, no shares to go with it. Sold puts at 40.50, and they are 1.7% in the money going into the week. So we need Galaxy to go up. Now the thing is, they're not capped, so a Galaxy could go to $5,000. It wouldn't matter. We'd win that trade. Hims and Hers selling calls at 51 and 53 for the week, 4.5 and 8.5% out of the money. They sold puts at 40, 18% out to help pay for the puts at 44 and 45. Robinhood selling calls at 140 and 144. Just about at the money. They're only 21 cents out and 3% out of the money. Puts are at 123 and 125. Iron was up big at the end of the week, so their calls sold at 58 and 60 are already in the money, 4.6 and 7.7%. That's why they got such big price tags on them to close out. So we're going to need some time value to decay away so we don't have to pay a fortune on those. Lucid Group sold puts at 19.50. They're 5.5% out of the money. I think I said puts. They sold calls at 19.50. Sold puts at $15, 18% out to help pay for the $17 protective puts. Lululemon is the third and final put spread with no shares. And they've sold puts for a credit at 180. They're currently 1% in the money. We need Lululemon to go up. MP Materials Corp. sold calls at 72 and 74, 1.6 and 4.5% out of the money. They sold puts at 58, 18% out to help pay for the $62 and $63 puts. Strategy sitting under 300, not pretty. We need it to go back up. Their calls are sold at 295 and 300, 2 and 3.7% out. Puts are sold all the way down at 220 just to collect a little money, 23% out. We're buying protection at 255 and 260. Palantir sold calls at 187.50 and 190. They're 1.5 and just about 3% out. Puts are sold at 155, 16% out to help pay for the 170 puts. Quantum Computing sold calls at 17.50, 12+% out of the money. Puts are sold at 12.50 and 13.50 to pay for the puts at 14.50 and 15. So we don't have a ton of downside protection here. As soon as if it drops below 14.50, that's a $2 put and that's a $1.50 put. So once it drops below these purchased puts, if it gets into the sold puts, we stop having protection at that point. Rigetti sold calls at 42.50, 45 and 49, 9.4, 15.8 and 26%. So we could have a huge day on Rigetti and get to capture a large portion of it in our ULTY share price. Puts are sold at 32.50 and 34 to buy protective puts at 36, 36.50 and 38. Rocket Lab, $68 and $68.50 calls sold, 5.3 and 6.1% out. $55 puts are sold, 14% out to pay for the $59 and $60 puts. I want to mention, I really like this. There was a long time where they weren't doing this, selling these puts much further out of the money. Now, they're not going to bring in a ton of income, but anything that they bring in helps pay and helps offset some of the cost of these, which then gives them more money to distribute to us, gives them more options income that they're generating. It's not just coming from the sold calls, and they're selling them way out. They're generally not getting touched, so they're expiring worthless. All right, and they're picking them far enough down. That's why they're so far out, to where while we do need downside protection, a lot of times these underlyings aren't dropping that far in a week, right? Rocket Companies sold calls at 18.50 and 19.50. They're 3.5% and 9% out of the money. New Scale Power sold calls at 39.50 and 42. They're 4.6% and 11.3% out. They also sold puts at 30, 20% out to pay for the protective puts at 33.50 and 36. Help pay. It doesn't fully pay, not even close. Getting to the end, SoundHound AI sold calls at 19.50. They're 8.5% out. They sold puts at 14.50 to help pay for the $17 puts. So that's nice. Look, we literally, it can only drop 98 cents before we're in the money on our protective puts. Now, possibility of that, decent. The possibility of it dropping from almost 18 all the way down to 14.50, pretty low. So that's and then there's $1.50 worth of room to run on the top side before we have to worry about our sold calls. Symbotic sold calls at 68 and 70. They're 4.5% and 7.5% out. They sold puts at 55 and 56, 13, almost 14 and 15% out to pay for the $60 and $62 puts. And Upstart sold calls at 55 and 56, 4.3 and 6.2% out of the money. They sold puts at 43 to help pay for the $48 puts. All right. On Friday, people continued selling out of the fund. I think we had 3 very large drops or outflows in a row. $8.5 million, not $1 million, more than that, 8.5 million shares came out of the outstanding shares, bringing it to 536,950,000. There's $2.7 billion in assets under management. So that actually comes to a NAV of 505. So it was selling on sale for a penny off on close of Friday. Most recently, they paid 9.03 cents this past week. There was some issues. We had a lot of people talk to us about it with Robinhood. I know Robinhood's trying to blame it on YieldMax, but I find that hard to believe since the other companies, including mine, I received my distribution. But I know it was pretty late Friday. People were saying they still hadn't gotten their distribution. It was showing in their account as pending, but I got mine on Thursday, the day that we're supposed to get it. I have Fidelity. Okay, the last thing on this page to talk about is I just run an average of I says first call, but the closest to the money call for every single underlying, and it's about 2.93% out of the money. So on average, we can move up. We can capture close to 3% upside in our share price before we got to start worrying about being capped. The second call, a lot of them sell, break it up, don't sell everything at the first strike. So the average second is 4.7% out. But as you know, things aren't going to just move up and down evenly, 2%, 3%. And so it's really going to make a big difference what goes up. For example, if Cypher mining goes up 2 or 3%, we don't get to capture a single penny of it because we're already in the money. And so for every penny this goes up in share price, increasing our value, the option to close it out will increase in cost. So and vice versa, if where was it? Rigetti goes up 7-8%, we get to capture all of it without. Now, obviously, the cost will increase on the calls, but they're actually still would be sitting in an out of the money situation, so they would still trend towards expiring worthless if they ended that way. All right, so that's just stuff to keep in mind. Now, usually we don't have the best luck, so the one that's already in the money goes further in the money while the ones that are out of the money drop, but there's nothing you can do about that. We want them to keep on trading the strategy they say. I don't want them to flip-flop to different things all the time and just get everything wrong. You stick to a strategy. If it's back tested and proven to work, and you just keep on doing it. There's going to be wins and there's going to be losses. All right, that's it for ULTY. If that's all you're here for, stick around. I'm going to get through SLTY pretty quick, and not going to go into anywhere near that level of detail. And at the same time, there's a dad joke at the end, and we all know that's what you guys are here for, because just listening to me talk about numbers is boring. So we're going to go high-level highlight reel for SLTY. They had about 90 trades throughout the week. Made some changes within the fund on what they were shorting and what they were closing out. You got to go through the different videos of the week if you want the details on those. Options trading on the week, they made $2,000 Monday, no trades Tuesday, lost almost $300,000 on Wednesday, made $75,000 Thursday, and made $184,000 on Friday. Unable to quite break even for the week, so it was a negative $33,000. That comes out to negative 7 cents per share. You're not going to distribute negative 7 cents per share, so we're going to have to go to the IV estimate next. We're not gonna go through real in depth here, so I want to just scroll through and hit a couple of highlights. A large quantity of the money is in Nebius Corp, 10.3%, and BitDeer 11%, whereas the average is 6.6% weightings. And when we scroll through, we do have some decently high implied volatilities. We'll do the highlight reel. ASTS 110%, BitDeer 106%, Circle Internet Group 109, IonQ 117, Nebius Group 110. That's all the over hundreds. Now I will run through the list quickly just to talk about what's being shorted. But overall, 5 increased in implied volatility, 7 decreased, and 3 remained the same, or realistically were added to the fund this week, so we didn't have last week's numbers. All right, so overall, the implied volatility weighted average of the fund increased from last week's 89.52 to 90.01%. So very, very close to last week's number. Share price closed at $37.87. And so using those numbers for our math comes out to a 65.5-cent distribution. So from there we go and try and figure out, excuse me, what it's going to be. Make a guess anyway. So if we look at SLTY over the course of the week, it was an ugly one, down 2%. So we don't think they're going to pay the full 65.5 cents since they lost money trading and decreased in value of their shares and dropped in the share price of the fund. But we still think it's going to be fairly high because of the high implied volatility. So I'm making a guesstimate of 55 cents per share for SLTY. And if we look, that's fairly in line. If you've been following along, SLTY basically has a bad week every week, but they've still paid 62, 46, 60, 63, 62, 55, 55, 70. So I think this will be another one of those 55s or thereabouts. All right, when we switch back over, let's see, I will just go through, tell you the name of the company that they are shorting and where they are selling their put. So Advanced Auto Parts, that's a new one this week, selling puts at 53. Align Technology, another new one, selling puts at 131. AMD, Advanced Micro Devices, puts are sold at $227.50. ASTS, $70 puts. BitDeer, $22.50 puts. Circle Internet Group puts are at 131. Carvana puts are at 315. Enphase Energies selling puts at 35. GitLab at 47. IonQ, that one hurts me to see it getting shorted. I think they waited too long though. IonQ ran up to $83 and then dropped all the way back down to like 60. So I wouldn't want to start shorting it after it drops $20. But $58 puts are sold. Kratos Defense and Security, $86 puts. Lemonade selling puts at $49.50. Nebius Group's puts are at $106. Reddit's puts are at 200, and RH, they're selling puts at 177.50. There's approximately $18 million in assets under management. People actually bought into the fund, so maybe people are starting to get bearish on this market, think it's going to start going down, and shorting it's going to be the way to go. So 25,000 share increase to the outstanding shares, bringing it up to 475,000. This usually trades at a premium, so maybe some numbers are a little bit off on what they're reporting. My numbers aren't off. It's literally a calculation of their numbers. But 37.98 NAV. So if you were buying at the end of Friday, you were getting a discount for your money. 62.62 cents was last week's distribution. And on average, the average put sold is 5.4% out of the money, meaning these shorted shares, they need to go down for this fund to increase in value, and they can go down 5% before they're capped on average. All right, that's all I have for you. So just a very short recap. Guesstimate of 9.25 cents, but they actually made more than that for ULTY, and a guesstimate of 55 cents for SLTY. All right, that's our week look ahead and payment guesstimate, mostly focused on ULTY, but we got a little SLTY in there. We just want to know what the pros think is going down. And so now I'll give you the dad joke of the day so we can close this out. Thank you for watching. Appreciate all the likes, shares, comments, everything. Please spread the word to other people that are into these high yield income funds or jokes. Just tell people that there's a funny joke at the end. All right, dad joke of the day. An area man has been brought in by the fashion police. They're questioning him over his criminal ties. All right. Thank you for watching. Have a good rest of your weekend, and I'll catch you in the next video.